Okay, recording this video well after the close, Tuesday, 31st of March 2020. It is just coming up to midnight Chicago time, 7 p.m. here in Hawaii, and we've got the European markets opening in a couple of hours' time. And just want to do a very quick update because we have a whole bunch of cycles syncing up. So last video from me, kind of mid to late last week, was talking about the rally that we were having was probably a sucker's rally and to wait for it to roll over. Don't get sucked in kind of going long because potentially we're going to roll over and go test the lows. And I think with the cycles lining up with today's activity, plus it was kind of a day where you do a little bit of window dressing, end of the quarter, so the market's kind of pushed up as far as they can get it in order to make their numbers look as good as possible, whatever that means in this kind of extraordinary world we're in. But we've reached some cycles kind of syncing up together. So I want to show you that. I'm going to show you three charts, the 15-minute chart, the 45-minute chart, and the 135-minute chart. And I choose those time frames because there are exactly three 135-minute bar in a day session of the Emini. So there's 405 minutes in a day session of the Emini. Divide by 3, that's 135. And then there are 9 45-minute bars exactly in a day session, and there are 27 15-minute bars exactly in an Emini day session. And you can see there's a factor of 3 going on. So 3 times 3 is 9, times 3 is 27, and so on. So I use a factor of 3 between my time frames, and everything kind of lines up that way. So the right-hand side, we've got all the price-based indicators, better sine wave, the cycles showing below the price bars, and then we plot our support and resistance lines based on those cycles on the prices themselves. Uptrends and strength are in red. So you can see here we had the rally off the lows down here at 2200, and I was saying down here we had a pullback to end of trend, a little pullback to end of trend, nice little sequence there, and we needed to get above this little kind of breakout level here at 2260. And that's when we got into this long trade here. Of course, I was out days ago, but anyway, it's kind of continued to push into those highs, and you can see now a whole bunch of cycles kind of coming together. So we've got resistance on the highest time frame has come in. We've got a pullback to end of trend on the intermediate time frame, and there's a little pullback to end of trend on the lowest time frame there. And with the end of today's activity, you can see we had the first breaks of support. So that's the first sign of weakness. So I kind of put a little notional limit to that as soon as we're kind of through that limit. I'm saying we've got a change in trend going on, and I thought that level was about 25.50, and of course in the overnight session we've gone down. I think we were down a minute ago, down at 25.20, so kind of we're through there. So we could end up being a gap down day, a gap down open for tomorrow, but let's see kind of where it goes. They might fuss around, they might kind of close the gap, they might kind of push around this 26.22 level kind of up here, or it could just, if there's no kind of appetite for that, just kind of lets loose and just keeps going. It's all amateur up bars. The last 2 or 3 days I said that's just watch out, because this is all amateurs thinking the low is in, we're going to have a V reversal, we're never going to see those lows again, get in, buy, and definitely, there was some buying kind of going on to getting the move going, maybe kind of getting out. We had a bearish divergence signal. I said that's on the 0 line, wait for the flush signal. There we go, we got it the next day kind of going on here. But you can see at these highs, it's all amateur bars playing into the highs with some Rambo patterns there. So for me, that doesn't look healthy. I think we're going to go down, whether it's straight away tomorrow or in the next day or two, and go have a look at those lows and go for that exhaustion sell signal that I've been droning on about, to match the exhaustion buy that set this whole thing off. We've still got to see exhaustion sell, I think, on the downside for me, to show this move is kind of properly corrected and we can rally kind of safely. So one time frame up, 45-minute chart, there we go. Same little pattern, little pullback to end of trend on the lowest time frame, syncing up with cyclical resistance, which is that pullback level in the intermediate time frame, and we're starting to roll over there. And there you can see nicely with today's activity, we had those Rambo patterns right at those highs up at 26.22, and we're kind of rolling over from there. And then one time frame up, the 135-minute chart, there we go, that's that pullback level. So that's that level there. You can see, so the pullback is in the highest time frame there. It's on the intermediate time frame there, and the lowest time frame there on the 135-minute chart. So let's see kind of how this goes. Just show you what we're seeing in the overnight activity. Had a little bit of a bounce from that 20 level. So this is the close of today, Monday, and yeah, we just sliced through that 25.60 level in the overnight session. We're kind of coming down. A little bit of a bounce from there. We're below supports on all three time frames. Big things happen at triples. So I always say, we either get big reversals or big breakdowns. So I think this is a breakdown. And just looking at these individual time frames there, that's why we bounced. It was a Rambo pattern there down at 17. That's what kind of bouncing off there. Anyway, so look out tomorrow. Could be interesting, and could be an interesting 2 or 3 days to come.